In the metals quadrant, taking a look at the June gold futures contract, which hit another new all-time high today, then moved lower. The high today, 2,324.80. That was up a little more than 0.4%, but then it turned around and moved lower. The low, 2,301.80. That was down around 0.6%, a little bit less than that. As we come in toward the end of the day, there is a little bit of time left. We're down a little bit more than 0.2%. And if we close negative today versus yesterday's closing price, it will be the first day of lower prices since March 22nd, and it will end a 7-session winning streak. On a weekly basis, however, gold is still higher by over 3%, working on the 5th consecutive week of higher prices in the last 7. And all of this is happening despite elevated real yields. Now that's really where the inverse relationship is with gold, and elevated real yields are not hurting gold yet, which is unusual. Inflation has been stable and longer end yields have risen recently, double digits so far this week in the 5-year note, the 10-year note, and the 30-year note yield. And this means real yields have been strong. And if that continues, it could weigh on gold prices in a more sustained way. But for today, at least, yields are lower and the dollar is lower in the aggregate for the 3rd consecutive sessions. And both of those typically are reasons for gold to rally, but that isn't happening today, at least not so far. It doesn't seem to be having any effect on the price of gold. As I said, with a little bit of time left, we end up with gold down a little bit more than 0.2%. So nothing's having an effect, at least in terms of the typical inverse relationships today.